The 2025 Georgetown, Texas housing market shifted in a way that looks calm on the surface, but underneath, it's already changing how buyers win, how sellers get stuck, and who's going to regret their timing in 2026. And that's exactly why you need to understand what's happening before you buy, sell, or relocate here in Georgetown, Texas. In this video, I'm breaking down why buyers have leverage in certain Georgetown price ranges and neighborhoods, while others are still moving well. We're going to talk about how sellers relying on last year's pricing are starting to sit longer and lose momentum. I'm Stuart Sutton. I live and work right here in Georgetown, Texas, have for over 3 decades. I help sellers and buyers navigate this market based on what's actually happening on the ground. I'm going to break down for you what actually shifted in the Georgetown, Texas housing market, why it's happening now, and what it means for you if you're buying, selling, or relocating here in Georgetown, Texas. What are most people seeing right now in the Georgetown, Texas real estate market? Well, they're seeing market headlines and casual conversations that make it sound like Georgetown is just taking more time than typical to normalize after that really hot run of a couple years ago. Now, prices haven't collapsed, but they do still seem to be declining. Homes are selling, but they're in fewer numbers and they're taking longer. To most buyers and sellers, this feels like far less than a stable, predictable market. And that's what everyone's been looking for. The sense of concern over that is causing them to hesitate and do nothing instead of adjusting their strategy. There's no doubt the numbers just don't feel reassuring at first glance. And inventory is higher. And here's why. It's much higher than the last few years, actually more than the last decade to be precise. It's not high enough to trigger panic headlines, but it is high enough to cause concern among buyers and home sellers. Average prices look relatively flat compared to the peaks, of course, of a few years ago. And we expected a correction after that run up in values, but prices still seem to be slipping, and that concerns buyers and sellers. In addition, days on the market has jumped, but then it remained there, and it's been fairly steady, which really kind of masks what's happening. So at this point, people kind of think we're normalizing and that there's a balance. But I think we're still in transition. What's actually happening beneath the surface is that homes are no longer moving evenly across price points and neighborhoods. You see, well-priced, move-in ready homes in desirable pockets still sell quickly, but typical homes are stacking up the days in the market like we've never seen, getting price reductions, or being pulled off the market entirely. We've never seen such a high percentage of unsold homes. This uneven movement is creating 2 very different experiences, depending on where and how you're positioned in the Georgetown, Texas real estate market. Sellers certainly know they don't have the leverage they had in 22, but they assume they still have access to last year's leverage and time's on their side, and that's just not the case. And buyers assume that waiting carries little risk because options seem to be plentiful. Well, both sides are underestimating how fast momentum is shifting, especially within certain segments of the market. By the time price reductions or missed opportunities become obvious, the leverage has already moved. Let me explain why this matters going forward. You see, Georgetown didn't cool evenly. It fractured into micro markets. Your outcome is not a general market scenario. It depends far more on property type, pricing, location, condition, and timing than it ever has before. People who rely on averages and headlines are the ones getting surprised because the average price slippage over 3 years was about 8%, but some neighborhoods fell over 30%, while some hardly fell at all. So if you use averages, it just won't be accurate. I'll give you another example. One segment, the 1 acre plus market, maintained values well into the correction and looked super strong, but now it's one of the weakest sectors of the Georgetown, Texas market. So overall, it still seems like a correcting market on the surface, but it's hiding a structural shift underneath. And once you understand why average market stats are misleading, the next step is seeing what actually changed in 25 that caused the market to split this way. So let's talk about what actually shifted in 2025. It's not about prices collapsing. The biggest change in 25 wasn't a crash or a boom. It's a change in how fast homes move. You see, we think we have higher inventory, but we also have fewer buyers. Georgetown moved out of a reflexive, rush-driven market in 22 into a hesitation-driven one for years after. Buyers are no longer assuming the first house they see is the only chance they're going to get. Days on the market tells that story. Homes are taking noticeably longer to sell, not just compared to 22, but compared to last year. What used to feel like a slow market at a few weeks now stretches into 30 or 40 days and has actually moved up past 60, 90, and 100 days or more. Now, homes that started high in price and then made price changes are seeing 6, 7, 8 months and longer on the market. And this time gap changes buyer psychology far more than small price adjustments ever would. Buyer behavior has slipped and the mindset has shifted from buy it now or lose it to, hey, let's see what else comes up. Buyers are looking at more homes than ever before making decisions. Second showings, follow-up questions, very commonplace. Some buyers are actually intentionally waiting weeks before submitting offers because they know they can. Price reductions aren't just a norm, but they're at a higher pace than we've ever seen. Price cuts aren't just a red flag, they're part of the listing life cycle. Many homes are reducing prices after the first few weeks, and most of these reductions are happening in the middle price ranges where demand used to be pretty automatic. Now, sellers are also learning that pricing slightly high no longer has little impact. It has a big impact, and those sellers end up pocketing fewer dollars at closing. This market split seems to be increasing. Entry-level homes are even sitting on the market, if not priced well to start with. Well-priced homes still attract attention in all price ranges and sell in a timely manner. But there are more homes that are on the market that are dated and overpriced, poorly located and overpriced, or just overpriced. You see, two sellers can list the very same week and have completely opposite outcomes. And this market split is widening as buyers get more confident saying no. This shift caught people off guard because headlines focus on median prices, not momentum, and not market sectors. Averages hide how uneven the experience has become between buyers and sellers who didn't adjust their expectations. After the correction started, it was very gradual, kind of like dropping a frog into warm water and turning up the heat. And that makes it a little more dangerous for people relying on old strategies. So here's another question. Who is actually creating the current inventory? Let's take a look. So who is driving the new inventory? It's not a wave of distressed sellers. It's not coming from foreclosures or panic selling. The increase in listings isn't really even an increase in listings. It just seems like it because inventory stats are higher, but fewer buyers are pulling the trigger. So inventory might be at a longer term, but the number of homes is not. A lot of sellers still have significant equity and low fixed rate mortgages. So this is a choice-driven inventory shift, not a forced one. Homeowners are listing because they can. They can make the choice to relocate or downsize or move up after years of appreciation. And they realize that despite the softening market, they still have substantial gains from that 18-month increase in values in 21 and 2022. They figure, hey, now might be a good time to unlock that equity. Even homeowners with sub 4% rates are deciding to go ahead and move. Now, not in droves, but it is certainly happening. Lifestyle changes are starting to outweigh the fear of higher payments. And people are realizing they can't pause life indefinitely just to protect a mortgage rate. Investors and out-of-town owners are adjusting their expectations too. Some investors who bought years ago are selling just to capture that equity. And out-of-state owners are reassessing long-term holds in the market, especially if they didn't really want to own rentals in this area. Not all investors are, but those who bought before the values ran up are repositioning portfolios. Now, resale homes tend to dominate the inventory because builders don't want a lot of spec homes on the ground in a slow market. Most of the new listings hitting the market are resale existing homes, not new construction. Now, there are plenty of new homes for sale, but most of those are to-be-builts. This creates competition between similar homes in the same neighborhoods. Buyers can compare options side by side instead of settling quickly. This matters for market direction because choice-driven inventory tends to grow in waves, not all at once. And as more sellers test the market, competition will increase. This quietly shifts leverage more toward buyers, which has been happening gradually over the last couple of years. Now that you understand who's listing, let's take a look at the next piece. Buyer psychology is changing faster than sellers realize. Buyers are no longer shopping in Georgetown, Texas and assuming they have to make a quick decision. The emotional pressure that drove rush decisions is long gone. Has been really since 2022, although it took a while to kind of get into the feel of the new market. Buyers do feel like they have time and more choices. A little more inventory changes their behavior. It gives them more confidence to walk away. Nowadays, instead of competing, they're taking their time and comparing. Homes are being judged more critically on layout, condition, location. Small flaws that used to be ignored, they matter again. Now, financing pressure certainly exists, but it's different. Higher rates haven't disappeared, even though they've improved a little bit, but buyers have mentally adjusted to them. And instead of stretching their budget, They're setting firmer ceilings. Monthly payment reality is forcing more selective decision making, which leads to negotiation leverage. Buyers are asking for repairs, credits, price concessions, and rate concessions. Sellers have been seeing offers that are more structured and conditional. Cash and strong down payments carry a lot more weight than they have in quite some time. It's a wait-and-see mindset. Some buyers, as I said before, are intentionally waiting weeks before making their offers. Others are watching price reductions and then re-engaging after they see one. This hesitation has compounded across the market. Think about it. Information matters. Knowing the position of any given home in relation to the market, its location, performance of that location. In other words, how well is the neighborhood doing in relation to other areas? You should see in-depth data, success ratio, hotness ratio, days on market, historical trends, like how did the home and the neighborhood do over the last 5 or 10 years. With this kind of data, you can make the decision that you won't second guess later. For example, I know one area with homes just as lovely as the next, but one area has far outperformed the other over time and even currently. If you'd like more details on the ratios I'm referring to and why they could be important to you, don't hesitate to reach out. Call, text, email, be happy to visit with you. If you're not quite ready for that, no worries. Our Georgetown, Texas Buyer Guide is free for you to download. It's packed with information that everyone says is extremely helpful. Now, sellers tend to fill a ship like this late. They often don't realize there's been a change until showings slow down, offers disappear. By the time price adjustments happen, buyer confidence has already shifted, and this delay creates frustration and missed opportunities for sellers. As buyer psychology continues to shift, the next question becomes, how does this directly affect your strategy if you're buying or selling in Georgetown, Texas right now? What this means for you right now if you're buying in Georgetown is that you have more leverage than you've had in quite some time, but only if you use it correctly. The biggest opportunities are homes that have been on the market 30, 60, 90 days or more, and certainly those that have had price reductions. You see, motivated sellers are open to price adjustments, closing cost credits, rate buydowns, and repairs more than they have been in a long time. Getting a rate buydown can save you money for years to come, so keep that in mind. Waiting blindly isn't a strategy, but selective patience is. And buyers who understand which segments are softer and which are still competitive are winning that game. Timing really does matter. And strategy matters. You don't need to be perfectly timed with the market to make a good move, but you do need to understand when momentum is on your side and when you come across a great value. But you also need to know when it's a poor value. Now, summer and fall tend to bring less competition. Spring, of course, brings a little bit more in the way of listings and more buyers. But do be careful, the wrong offer can still cost you the home you want. And just because the market is softened doesn't mean every home is overpriced. Now, if you're selling in this market, pricing based on last year's comps is one of the fastest ways to stall out. Homes need to be positioned correctly from day one. Studies show that homes that do not have to lower their price before selling actually end up with more money in the seller's pocket. Overpricing gets corrected by price cuts, and eventually that's a lower price than you should have to take. Condition and presentation are no longer optional. They're an absolute must and have to be top-notch. Buyers are less forgiving than they used to be. Dated finishes, deferred maintenance, poor photos, they show up immediately and buyers notice those. Homes that feel turnkey still attract strong interest. Homes that feel just good enough often get skipped over entirely. Let's discuss real quick why this window isn't going to last forever. I think this is a transition phase, not a permanent reset. As rates adjust, inventory levels change, leverage is going to shift again. It always does. Buyers who wait too long could miss this period of increased seller flexibility and some great opportunities. Sellers who adapt early will perform far better than those who react too late. Let's try to understand why this moment, this year, 2026, is so important. Let's zoom out and look at where Georgetown fits into the bigger market cycle. You see, I think this could be one of the last in-between years before things shift again. In 2008, when we saw that big crash, the first year with price increases was 2012. That was 4 years later. And then we saw over a decade of steady price increases. Well, guess what 26 is? It's about 4 years after the correction started in 22. No, you can't predict and time things perfectly, but you can learn from the past. And real estate markets are fairly similar. Yes, low rates and the pandemic stretched the normal real estate cycle longer than usual, but this correction phase has been fairly normal as far as corrections go. Inventory is doing its job again, even though it's not extremely high. The lack of buyers makes it feel like it is. Sellers are making purposeful decisions again. Sellers are having to compete again. And even though Georgetown is somewhat independent, it does continue to grow as part of the greater Austin metro infrastructure. In development, in zoning, and those type of decisions are going to shape supply over the next few years. And mortgage rate movement dramatically affects demand the moment it happens. Nearly always does. That's why 2025 felt like a transition year, because people assumed that really nothing was changing. But at the same time, the mechanics of the market are already very different. And the combination of what's going on creates great opportunity for those who are paying attention. What happens in 2026 and beyond probably isn't going to seem gradual. When rates meaningfully change and inventory crosses certain threshold, you'll see the shift. And people who waited for a clear signal often missed the window and some great opportunities. Those who benefit great right now will be buyers who understand leverage and act selectively and don't just wait blindly. Sellers who price correctly and prepare properly from day one are going to do just fine. And those who relocate based on daily life and locations and not hype are going to feel good about their choices in Georgetown, Texas. So let's bring this all together and talk honestly about what this shift means if you're going to buy, sell, or relocate in Georgetown, Texas. Most people who get surprised by the Georgetown, Texas real estate market don't make bad decisions because they're careless. They make them because the market changed. And while everything looks normal, it's not. The biggest mistake right now isn't buying or selling in Georgetown, Texas. It's using an outdated strategy in a market that no longer works the same. Georgetown hadn't crashed, but it also isn't the same market it was just a couple of years ago. And that in-between phase is where timing mistakes and regret typically occur. I'm Stuart Sutton. I live and work right here in Georgetown, Texas, have for over 3 decades. I help buyers and sellers and those relocating to this area make decisions based on how daily life and market realities line up. Not hype, not headlines, not guesswork. If you're thinking about buying, selling, or moving to Georgetown, Texas, reach out using the contact information in the description below. I'd rather help you make the right move once than watch you have to correct it later. If you want a deeper breakdown of Georgetown neighborhoods and how they really live day to day, just touch base. I can walk you through the areas that are holding value despite the softening market and those that are continuing to weaken. And again, if you're not quite ready to reach out, no worries. Download our free Georgetown, Texas Home Buyer Guide. It's packed with information that's certainly going to be helpful to you. Hope to meet you soon. Remember, it's your choice, so make it a powerful day.